Hey everybody, Scott Voak. Hope you are having a great day. This is your monthly update for the Del Sur Forest Ranch Bluffs Santa Fe Valley area through February of 2023. And to kick it off, the old joke in real estate is what happens when interest rates double? The answer is pretty much nothing, and that's about what we're seeing. So, in these areas last month, that being February, among resale homes, we saw 7 sales. Now, there were a couple new sales up in the Bluffs. The developer is still getting rid of some homes there. But 7 resales sold. There are 14 in escrow, and 12 homes are active. There were also 3 homes that came off the market because the sellers were frustrated, and those may come back on the market or they may wait a while. Now, the interesting thing you see here is the bulge in pendings. There's 14 pendings, and that's easily explained because we had an interest rate drop in January, and that brought a lot of buyers to the market, and they sucked up a lot of inventory. And now we're stuck with about 12 homes left on the market. In terms of market time, this is kind of interesting. The homes that actually sold were on the market for a total average of 43 days, while the homes in escrow were on the market for 62 days. And that makes a lot of sense because during February, if you're on the market that long, you started in early December, which is like the worst time to go on the market because nobody wants to sell over the holidays. The homes on the market now that are still active have been on the market 57 days, and that's a little bit long. If you're currently on the market and you're anywhere over 30 days, if your home is under $3 million, because above 3 million is where we're seeing things a little bit slower, you've got a problem, and it's one of 3 things. Either your presentation is wrong, meaning the marketing, your showing times, how you're showing the house, how you're setting up the house when you're showing it. There's a problem with that. That's the presentation. There's the house itself. In other words, you might be rocking the original 2004 paint scheme, white appliances, and carpet. That's not going to work. There could be some other structural issues, or you're just not getting enough marketing on the house. But if you're on the market over 30 days and you're under $3 million, you need to fix something because this market's moving a lot faster than that. What I want to do now is look at a couple of specific markets, and the first here is the Del Sur market. This is a chart of home sales over the last 90 days. The blue dots are solds, the diamonds are homes in escrow, and the green triangles are homes on the market. Now, this line represents what buyers consider the average home to be worth because that's what they're actually opening up their checkbook for and paying. I had somebody misinterpret this last month and think this was my estimation of the value of their home. This has nothing to do with my opinion, anybody's opinion. This is actually what buyers are writing checks for, and you've got to decide if you're looking at this, is your house above or below average? And we can go into what makes a house above or below average maybe in another video, or give me a call and we can talk about that. But at 2,500 square feet, we're looking at about 1.6. At 3,500 square feet, we're looking at about call it 2.5. So two and a quarter million for 3,500 square feet. Looking at Del Sur over time, we've got this chart superimposed over time, and you can kind of see we shot up here. This was, COVID, and then rates started to increase and the prices came down. So, but lately we've been holding our own with a slight bit of an uptick here in the last month on the higher end houses. Now, if we look at the similar graph for Forest Ranch, let's take 2,500 square feet here. We are looking at more about 1.55, so about 50,000 under where Del Sur is. At 3,500 square feet, we're looking at about 1.91. So that's about 300,000 under where Del Sur is. So at the higher end, Del Sur is performing better than Forest. The lower end, Forest is more holding its own. So I do get a lot of questions on what is the average house. These 2 homes actually sold in Forest Ranch this last 30 days. So let's take a look at these and I'll give you a little bit of an idea. So first, this home here was at 16917 Silver Pine. It is a 4-bedroom, 4-bath home on the north side of Forest Ranch. It actually has a great location. It has a bedroom downstairs, which is very key. This home was on the market for 0 days. Basically, it never hit the MLS. It was a private deal done, 2 agents. Just one agent knowing it was coming on the market, talked to a friend, and they sold it. This sold at exactly the average, even though it's got a great location and a bedroom downstairs. Now, it could be a number of reasons for this. It could have been the inside of the house had problems. It could have been that because the 2 agents did the deal and it never hit the open market, they didn't get competitive bids, so it didn't get a chance to get bid up. But that showed up as an average sale. The second home I want to look at is right here. And why did this home sell above market? Well, this home is also in Forest Ranch, this on the south side. It is 4 bedrooms, 2.5 baths, 2,829 square feet. Now, advantage for this home is it had been remodeled inside. So you had quartz counters with a white waterfall. You had new white cabinets. It was really kind of cherried out, kitchens and baths. Original hardwood floors, but they've been buffed nicely. Also, although the landscaping in the back had been allowed to grow up for privacy, had it been cut down, it's got a panoramic view of Black Mountain. So what you've got here is, despite there's no downstairs bedroom, you do have a good location. Walking distance to Stone Ranch Elementary and Oak Valley Middle School. You've got a potential phenomenal view, and you've got an upgraded interior, plus the agent brought the house to market, so was able to field competitive bids. This home actually ended up selling about $10,000 over asking price. So you can see the importance of bringing the home to market and not just kind of doing a pocket deal. So there's more that go into it, and I can break this down a little bit more. What am I thinking we're going to see long-term in the neighborhood? I think we're pretty solid. As much as rates are going up, that is really limiting the inventory. I'll be doing a video on that shortly. It's called the elasticity difference between buyers and sellers to interest rates. Looking at the larger picture, how did San Diego do last month? Well, I shot a video on it, and I'll stick it up in the corner here. Basically, good news. Detached homes were up 6% month over month in San Diego County on the median basis. Attached homes were up 4%, both very strong. We found that the mean actually fell, which just means we're selling a different shift of houses. Check the video out and I go into it in more detail. What does it mean for us going forward? We're low on inventory. Rates are going to go up. That's going to keep inventory off the market. It's also going to keep buyers away because it's going to really shrink their buying power. But we've got so little inventory that really what you're going to see is you're going to see a contraction of realtors, a contraction of lenders. The industry is really in a bloodbath. Companies that aren't well financed are going to go out of business. But in terms of you and I owning our houses, the supply demand is pretty well in balance, which is why we're seeing prices recover a little bit. If you have any questions, feel free to reach out. If you haven't subscribed and would like to be notified whenever I post a new video, please go ahead and do that. And if I don't hear from you, I will talk to you again next month.